Welcome to Becoming Global FinTech Stories. I'm delighted to host today's panel that brings together two leading lights in the FinTech ecosystem who have not only stormed the Southeast Asia market, but also have impressive global reach. This session is part of the UK's partnership event at the Singapore Fintech Festival and aims to shine a spotlight on the journey FinTechs need to make to ensure international success, with a particular focus on the opportunities in Southeast Asia. Southeast Asia is increasingly recognized as one of the go-to markets, particularly because of the potential for adoption of new services to meet the needs of its 300 million underbanked citizens. Take-up of new services has climbed sharply, with 40 million new internet users this year alone. To make the most of this trend, we have launched the UK Southeast Asia FinTech Series, to match 15 high-growth UK fintechs to opportunities in the region. But it's not all plain sailing, and that's why I'm delighted to host panelists from two of the most interesting companies operating the region with unique insights of what it takes to build global fintechs. First of all, we have Li Meng Li, CEO of Razor Fintech and Chief Strategy Officer of Razor, which is probably one of the best known tech companies in Singapore and the region due to its phenomenal popularity amongst millennials. And he has over 15 years of impressive corporate finance experience, including with JP Morgan and ANZ. And I'm also delighted to have Guillaume Pousaz, CEO of Checkout.com, one of the UK's largest online payments software platforms. Guillaume founded Checkout.com in 2012, bootstrapping the business until its record-breaking 230 million Series A in May 2019. This round valued the business at nearly $2 billion and represented Europe's largest Series A fundraise ever and the third largest Series A globally. Checkout.com has 14 offices globally, including Singapore. So that's quite an introduction, guys. Two really impressive backgrounds. I expect there's quite a lot of highs and lows on those journeys, and it's not all been plain sailing, as I said. But maybe to kick us off, Guillaume, going to you first. How did you find yourself in the fintech world, and what surprised you the most about this journey?
Well, I think a journey as an entrepreneur is always a big adventure. So you were mentioning there's ups and downs. Every entrepreneur has to look at a problem he's trying to solve. For us, it was really basically offering online payments because we thought it was fundamentally broken. When you look at the old incumbents and the payment systems in general, you'd have different layers in a sandwich between the merchant and Visa, MasterCard. And what we were trying to do was to basically remove all the layers, create a single layer only, and offer merchants the ability to take payments anywhere in the world, all the alternative payment methods, from an Alipay, a WeChat Pay, or even an eNets in Singapore, and at the same time have PayPal and have everything through a single API. And we say this like now, it's like a simple sentence, but it's a pretty difficult achievement from a technology perspective to do it properly. Because again, merchants usually see what they see in the front, but they don't see everything that is happening in the back. And we've been on that journey, like you said, for about 8 years, and the company has been growing ever since. So it's for us, that's the problem we wanted to solve.
And what was most surprising about that journey?
I think like one of the things is many times people told us it's going to be impossible, and we've managed to make the impossible possible. I think when we were only a software company and we said, hey, we want to become an acquiring bank and we want to be regulated. And in 2012, we got our, financial license in the UK. That was an achievement in itself. Then it was like, oh, you want to become a settlement, an acquiring bank with Visa, MasterCard, so you need a certain license of Visa, MasterCard. Same thing. Many people tell us it was never done before, and fundamentally we did it as well. And then it was like the technology behind the license, we did it as well. And then we took this business, which was a UK business, made it a global business. We have a license from Mass. We have a license in Hong Kong. We have a license in Brazil. We have all these, bins of Visa, MasterCard in all these regions. We operate now. You mentioned 13 offices. Actually, it's 14 offices. I know we hire 100 people a month at this point, so it's like really like growing this business. And I think it's the resilience and the hard work and not taking no for an answer is what has driven us throughout the entire time.
And Li Meng, that probably sounds quite familiar to you in some ways in terms of the Razor journey, but then also you're sort of starting this new stage with Razor Fintech. So maybe you can say a little bit about what that's been like, and again, what you found most surprising.
Well, I guess the challenge for us has always been, whenever we talk about having gone into fintech business is, hold on, aren't you a hardware business, or even worse, aren't you just a gaming mouse company, right? So I think that in by itself was a big challenge, and we love challenges. We are gamers here, so we again, how we got started on this whole journey was kind of similar to what Guillaume was talking about. But we actually started it from a gaming perspective, because we saw gaming becoming really huge globally. We saw gaming in Southeast Asia really kind of, across, whether it's the console, PC, and actually really driven by the mobile platform, right? And again, the game companies have also evolved their business model, where instead of per use titles, it was now kind of in-game purchases. So we were figuring out, hey, if our gamers right at the center want to do better in games, they want to buy virtual items, virtual skins, and all that, they need to find an avenue to make payments. And a lot of them are underbanked, underserved. So we went out, built out a huge offline channel to let them convert fiat into the digital wallet. Then we kind of said, hey, maybe you also need that kind of payment gateway to connect. So we built that up. And over time, we also saw that other guys said, hey, building up Southeast Asia bit by bit is really, really tough. The regulatory process takes too long. Can we ride on what you have? And we started seeing that this fintech business has evolved away from just being gaming. And that's how we kind of grew over time. And we then said, we've built up this business. What else can we do? The brand is really strong. Will we be able to also drive that kind of next evolution of this fintech business, going into a connection with our consumers directly, right? So the first part is really kind of a B2B merchant relationship. We said, with Razor's brand, can we go down that path? Again, same as you, Guillaume. There's no way you can do it. Gamers don't have the ability to actually, even make payments, right? They are young kids, and all that. We faced quite a little bit of challenge in terms of convincing people, convincing the market. We successfully launched our wallet here in Singapore, in Malaysia. And, I guess the surprising thing that came along was we do realize that with the strength of the brand, how sticky our users are. They are very, very keen on, you even using down to this Visa prepaid card that we launched about a month ago, where we saw a ton of interest, coming off what we would say is a very saturated business, which is just a prepaid card. And we literally have tens of thousands of people who have signed up, waiting to come in. We got covered on USA Today. We got covered on TechCrunch, where everyone's kind of saying, when are you launching this out here? Why are you just launching it in Singapore? So I think it's been quite an interesting journey for us, especially the last few months, where we've kind of announced some of these things that have been in the works for a while.
So it sounds like there's a common theme of stubbornness there, which I'll let just hang around what that says about both of you as individuals. But I'm also liking the fact that you're so on brand in Razor. And I was saying before, Li Meng, it's nice. It looks like the shop, a little bit like the shop that you opened in the UK last year. I say shop, really is a mega store, right? And if those people watching haven't been to visit yet, you absolutely should in London. It's really, really impressive. So maybe to encourage a little bit of debate, you've both taken slightly different approaches to fundraising to grow your respective businesses. What are the things that you wish you knew when you started out, when it came to fundraising, that you would have told your slightly younger self to keep in mind as you went down the fundraising road? So Li Meng, maybe start with you, and Guillaume, chip in.
Sure. I guess I'm a little bit different from Guillaume. I started as a banker, as a banker for Min, who's the founder CEO of Razor. I mean, I've known him for many years. We've been talking about fundraising, IPO back then. I would say that one of the things that mattered to Min quite a lot was always to find investors that understand that this is a long-term play, understand that that they come on. It's not just about the dollars and cents. It's about what strategic value they can bring on board. Interestingly enough, we don't have any kind of VCs or really private equity funds being our pre-IPO investors. So it's not been easy as a banker trying to convince him, hey, look, you can fundraise, you can bring in the top names, and he's always been kind of like, I'm trying to not bring these kind of investors in because I'm just afraid that I'll get rushed into doing something that I don't think is the right timing for and whatnot. Obviously, the IPO in Hong Kong 3 years ago, we raised a ton of cash then. At the fintech level, I would say that DNA is also kind of now being pushed down to us, where we obviously, as we look to grow this business, not just in the region, but globally, it's also the same thing. We've gotten approached by different folks saying, look, we want to see whether we can put money in there. But the first conversation really always ends up is there strategic value, obviously to both ends, before we even think about taking money. Because I think that means that you're bringing investors that's like-minded, has that long-term view, understands why you're trying to build a business towards.
And Guillaume, you took a slightly different approach, right?
So for me, I was going to say it's a bit of a different story. To answer the question, quickly, I would say the advice to the younger self is to I should have done it sooner, because we probably waited a bit too long. That's one thing. But at the same time, I mean, I have a product background. I was never a banker. I got product and engineering background. It was all about building technology for so many years. And we were always like, until we have a product that is really ready for prime time, there's no point in raising capital because it's going to change the dynamic. And, we're happy, basically not saying making no money, but running a smaller business. We're not in a race. I mean, this is a life mission for us. We want to build a generation category defining company. And, payments is so big. The TAM is so big. You were saying earlier, in Asia, cards are going to grow 30% year on year for the next 10 years. This is the McKinsey studies. So the reality is that we were very product centric. We wanted a good product. And fundamentally, until we were really happy with the product, which is building all these layers of the sandwich ourselves, merging everything and owning the value chain full stack, cloud-based, we didn't want to take investors. Now, I mean, very much like Li Meng, I think what I realized after when we did our Series A in 2019, and when I say early, I'd probably have done it 2 years early because we finished building the whole stack in 2016. And that's when the company really started to take off quickly. But what good investors bring you is that, first of all, they're thoughtful partners and they're strategic thinker. They've seen growth like us entrepreneurs have never seen, so they can really kind of help us go into the right direction. The other thing I would say is that before we do any fundraise, and you mentioned the Series A, but then we had a Series B at 5.5 billion in May of this year. So the company tripled in value in 1 year. And Series C is probably not too far because we keep growing at a very fast clip. But the reality is that we've write what we call is the equation of value. What are we looking at? Why are we raising capital? What is the purpose and the goal we're trying to achieve? And on the Series A, for us, it was very simple. We wanted three things. We wanted a very good operator, and that's why we took Insight Partners, one of the largest kind of private equity thinking, tech-driven investors. They did 65 IPOs throughout their history. They know how to scale companies. We took an investor that was super well connected in the Silicon Valley because this is where all our biggest customers at this point. And it's the big part of the book are these customers. So we wanted to understand, how does the Silicon Valley work? We have a San Francisco office with about 50 people now, but that's 5% out of the 1,000 people that we have. And so we took DST, Yuri Milner did the largest, round in Facebook and everything. And then we took a GIC because we wanted a strong foothold in Singapore and in Asia in general. So we wanted somebody who was going to help us be better in Asia. And I think when you go to Asia, you have a few options, and GIC for us was top of mind. I mean, I know there's Hill House, Temasek, but the truth is, for us at GIC, Chris Emmanuel, who actually sits in San Francisco, was awesome, and we were like, that was our equation of value. Series B, same thing. Then we wanted somebody who understood public markets really well and the journey to public markets, like somebody who was both public and private, and we took Co2. And I think like every time we raise capital, we go and we basically do a napkin test. What are we trying to achieve? If you're not able to put it down in a very simple way, it means that you don't know what you want. But if you're able to know what you want, then it's just a matter of like, having the financial performance and engaging. And I think the other advice I would finish to people is that this is still to, entrepreneurs that are looking at this is your business, and you're really working with people, with partners. You're not working with firms or money. So make sure you choose the right partner. It's like really important, because even within firms, you have different partners. And I do a lot of mentoring of other entrepreneurs through pro bono or things like this, trying to help people now. I think it's important to give back. And very often you see people, they're like very impressed because they see a very good name of an investor, a famous brand, they've backed all these other companies. I think you're still dealing with people. And so make sure that the partner that you choose is the right partner within the firm, somebody who cares about you, because that thoughtful mentor, person who's going to help you, you want to make sure that he's really aligned. And like Li Meng said, is aligned with a very long-term vision. We have a 20-year plan. I mean, it's written, the investors know it. And it's, you're going to have to execute against this. And it's, you want to be very transparent and honest with your, capital partners very early on what you're trying to achieve.
Yeah, so it's interesting to hear how you both have emphasized the importance of a long-term relationship and getting the right chemistry with someone. Obviously, in Li Meng's case, it sounds like you're saying that actually Min, the founder, found the right chemistry and so hired the person, let alone accepted investment from them. So again, it's about the team that you build around yourselves, which I think is really, really interesting and very important, especially at the moment. I mean, what's your view on what the fundraising environment is like in a COVID world, and is that impacting access to capital? Or if you've got a great idea, you're still plowing ahead, particularly for the smaller guys who maybe aren't established, don't have the reputation that both of you do. What do you think it's like for them at the moment? What are you hearing from the people that you're mentoring, for example?
I'll take this one quickly. So at least in Europe and the US, the market has never been as hot as it is right now. So I think it's like right now, I do a lot of angel investing at a personal level as well. And like the deals are super competitive. Everyone is fighting to be in the right deals. I think there will always be money for good business and good executors. So if you have a track record, and one thing we see in Europe and also in Singapore now, people have like, they've done their first startup, either as a CEO or as an employee, have vested their options, are moving on, and they can demonstrate to like, investors that they have experience in running a business and they want to do it again, or like, a different flavor of the business. So clearly good ideas and good people will always find capital, especially now.
Do you agree?
So I totally agree. No, I totally agree. I think the capital is there. I think just being more selective, right? So again, when you say selective, absolutely, selection is on the people who are trying to execute. Do they have a track record of actually executing well? I think comparing to the kind of good years pre-COVID, if it's good ideas, someone wants to take a punt, that's fine. So people kind of spread and spray. Today, being more selective, put good money, maybe even bigger tickets, but backing just a few of those guys who actually is able to demonstrate. I think that's the issue. Even COVID-19, we are, at least from my perspective, where I'm looking at it from the chief strategy officer's role, where we're looking at deploying cash, it's interesting times to stay in touch with some of these entrepreneurs, because these are trying times. And this is actually a good time to see how people are able to react. There is always going to be some pain, right? I'm sure, Guillaume, growing your business, you've got the good stuff and the bad stuff that usually you don't talk about the bad stuff, but there is a ton of them. But this is a good time to actually see how, firmly the entrepreneur's head is on his shoulders, really able to, change their business model if required, and execute. So it's interesting. I'm spending a lot of time interacting and looking at these businesses to see what comes out of it.
One thing, if we look at history as well, on the back of very big macro events, and think Lehman Brothers, it always generates a huge new batch of large companies. And now, I mean, look at Airbnb, look at Uber, look at Checkout.com, look at Stripe, look at when all these companies kind of like emerged. It's basically 2010, and I wouldn't be surprised that on the back of COVID, people will have it's impacting everyone's lives, and because it's impacting everyone's lives, some people will lose their jobs, some people will say, hey, I want a different job, like maybe compensation in banks is going to be changing. And I think that this is going to create a whole new batch of entrepreneurs that are going to come with novel ideas, and they're going to try to bring these ideas to market, and it's going to create big companies. I think like that's if we fast forward 5 years, I'm nearly certain you'll get a whole new batch of like large unicorns.
We'll check in with you both in 5 years' time and see how all your investments have paid off. My guess is really quite well, right? It's obviously a very painful time across a variety of fronts, but even in the UK, for example, we are definitely seeing that creative destruction, which is bringing around some new opportunities. And when we look at those sectors which are not only maintaining their position but actually growing, tech is absolutely at the top of there. And the number of job vacancies in tech, for example, continues to increase every single week because the demand is there for talent, because companies are growing. So really painful, but we hope there is an upside to all of this in due course. And you've both touched on sort of how important Asia is to your growth, and particularly Singapore. Could you say a little bit about what's different to operating, particularly in Southeast Asia, whether that's from engaging with investors to actually growing the business? How have you had to adapt your global strategy? Or is it sort of bottom up in terms of looking at it in individual countries, or have you had your 20-year global vision, which Guillaume, you've touched on, and it's about trying to adapt that to individual opportunities? Maybe you want to go first, Guillaume.
Yeah, so I mean, I'll just say on the 20-year vision for us, I mean, our vision is to build the future of banking. So today we do payments, but it's all about moving money in a business and outside of a business. And there is all the treasury, the FX, and all the things that you can do on the side, the card issuance. We don't want to be a deposit-taking bank, but I think there's a lot of things we can do. So that's really what I meant. Opening countries is something we do all the times. And I'll focus on Singapore, though we operate in 7 countries in Asia. But the reality is that everywhere we go, it's always about finding the right group of people in the beginning that really understand the country. And this is a company where we don't ship people from the UK to go and run Singapore. It's like, this is not the approach that we take. We always want to have local people. Same thing in Hong Kong, same thing in Australia and New Zealand and Philippines. I mean, everywhere else where we kind of operate. Because I think that you need to understand the local market. Financial services, by definition, yes, the technology is global, but I mean, this is why there's a UOB, and a DBS in Singapore. They know how to speak to their people for financial services. And while we're a technology company, we also have a financial services arm. And I think like the local angle, really adapting to local markets is very important. And this is something, any country we go, and when our go-to-market strategy is finding a good group of people whose values and moral compass is similar to ours, to the company, very important, and then let them blossom that region, following we do have a global template / a playbook, but that they can really adapt to what is, the local market. And I think like this is, when we were mentioning, and especially for the theme of this session, is that we are a global business. It's 1,000 employees, and 50% of them are in Europe today, but 50% are across the other 14 offices. And we give a lot of independence to all these countries. We try to be hyper local. And we hire 100 people a month right now, and it's mostly outside of Europe. It's probably 2/3 outside of Europe. So it's clearly, I think it's just don't downplay what the flavors of a local market is if you're an international business trying to come to Singapore. It's very important.
And relatively speaking, how does Asia fit in compared to the other parts of the world that you're looking at outside of Europe?
I'm the most excited about Asia. I mean, my brother lives in Hong Kong. I mean, I think like Asia has the biggest potential. It's very easy. It's like mathematical from a people perspective. In Singapore, you're in a great position to go after the Indian market as well. So I think it's like, you have Southeast Asia, you got China, and you got India, all within a few hours flight. So I think it's like, you don't need a PhD to know that the future is there. I think like that's my point of view. I'm trying to do the napkin test here and keep it simple, but that's how I would position it.
And Li Meng, I mean, you're obviously homegrown Singaporean as a company. What's your take in terms of the relative opportunities in the region, particularly sort of Southeast Asia, but then how you tailor your approach to be a global company at the same time?
So not anything different from what Guillaume said, right? So technology company, by nature, there is that kind of global mindset, global template. But because we grew up here in Singapore, Southeast Asia is kind of our backyard. We also know kind of the opportunities and challenges at the same time. So people on the ground understanding, especially when it comes to financial services, having to deal with regulated businesses, people who knows that needs to be on the ground and dealing with day to day. You can't try to do it kind of satellite approach. That doesn't work, and obviously the regulators will never allow you to do that as well. So that's something for the people who are tuning in. Even when you come to Singapore, just understand Singapore is probably the closest to the UK. And then once you step outside of the UK to Malaysia, to Indonesia, to Philippines, that's a whole new ball game altogether.
Yeah.
So there's no one size fits all. I mean, from our perspective, we spent a lot of time on the payment side across Southeast Asia already. So we are going the other direction. We've kind of built up the Southeast Asia business, supported by Razer that has that global reach, to then think which part of the business can go into other emerging markets, which part of the business fits more kind of the developed markets like the UK, the US. And it's also where we already have a very strong fan base, 100+ million, hard, fervent Razer fans. And hope Guillaume continues to be a fan as well.
We've outed him, big Razer fan.
No, exactly. So we have people who have been with us for a long time. I mean, 15 years at Razer, been around. People have grown up with them. Their kids are now starting to game. So even the TAM has widened quite a lot for us as we look at kind of really growing our business. I'm sure we will kind of come into play in certain countries, Guillaume, but I'm sure there are also opportunities that I think we can work together, because we always believe in this whole thing about, I don't think there's one person that can actually go out there and conquer the world, right? So we are very happy with partnering with people. We know what we're good at. We also know what we're not good at. So we are kind of quite firmly seated on the ground on knowing the direction that we want to build towards.
I couldn't agree more with Li Meng. You want to go?
No, that's just the... Go ahead.
No, so what I was going to say is that I couldn't agree more with Li Meng. I think that the financial services industry is so big, that the total addressable market, that there's not going to be a Google or Facebook of payments. Regulators, first of all, would deny it. And I think that there is room for many people to operate next to each other. It's good for competition. It's good for everything to have multiple providers. And this is something we firmly believe in. And then I think what I would say, maybe for the benefit of the audience, is that when in the gaming industry, they're solving some of the most complex problems of payments, because fundamentally they go super granular. So where a Razer would support hundreds or of alternative payment methods, we're going to do only 50, but we do the ones that do 98% of 99% of global net revenue that the big merchants want to approach. They would go super granular, especially in Southeast Asia, where there is so many wallets and it's changing all the time. And of course, there's a value, because I don't want to do the long tail. So the same way that I will support Razer for Visa, MasterCard at scale across all the regions, they might support me and to reach certain wallets in Asia. And I think we've always said at Checkout, we're a lot more like a Google company, where we believe in an open world, and you can use Android and everyone can kind of partner and try to create value together for the end user, than trying to ring fence everything and saying, hey, it's a big competition. I think it's competition is always going to be there, but I think you can be friends with your competitors. You can work together. You can create value together, because at the end of the day, what we're trying to do is to solve the problem, that same idea I had 15 years ago, which is we want to help people make payments easier. That's what it is, and it's not that easy in emerging markets. It's maybe easy in Singapore and certain parts of the world, but when you go to Indonesia, when you go to Malaysia, When you go to like, Pakistan, where we're doing a lot of work at the moment, 200 million people, it's not easy. It's changing all the time. And ultimately, that's the goal we're trying to deliver on.
I can feel and hear that we're on the cusp of a partnership here. So, this is great brokering of relationships as we speak. Li Meng, maybe we can talk a little bit about the rest of Southeast Asia. You've both touched on this, but quite often the focus is on Singapore, understandably. But Singapore is pitched as, a regional hub, somewhere that's fantastic to bounce off to the rest of Southeast Asia. And if you go back to the sort of envelope test, the raw numbers show you that's where the opportunity is. But how do you sort of navigate Southeast Asia, the diversity, the regulators, working out where to invest? What's been your approach so far?
So we do a lot of work actually before we head into a new country or region, especially in Southeast Asia, because there are a lot of nuances. There's a lot of local dynamics that even, having grown up in Singapore with that stone throw away from the regional markets, there are certain things that you just don't know, right? So what we end up doing is we spend a lot of time, going back to my original comment, is we look for a strategic partner that we spend a lot of time understanding, and we won't go in the market ourselves. We'll kind of bring them along. They show us the ropes. For Malaysia, we went in because our partner literally kind of, number one, has the entire system or ecosystem that at least gets me off the ground. They own 7-Eleven, they own Starbucks, they own all that. So at least I know going in there, they are already established. Their network is able to provide at least that stability at the start before we try to do too much. So same kind of thing that we've done in other countries in the region is find the right partner. It may take a little bit longer, but it's fine, because I've seen a lot of horror stories where guys go, I have a great tech, I have great guys, I'm going to just jump in and do it myself, and they come back bloody and without their shirts and all that. So we're trying not to do that in Southeast Asia. For the other parts of the world, I think because in Europe or UK or the US, I think we do at least have a better understanding. It's more kind of, I would say, not as disparate in terms of the way things are done. So it's a little bit easier, I would say. Not that it's easy, but it's just easier than navigating, Southeast Asia. And things are changing a lot, right? I think Southeast Asia's regulators, and Singapore has been leading the pack, is how do we kind of move as fast as we can to new standards, new regulations. You mentioned digital banking. Malaysia's looking at it. Philippines is looking at it. Thailand's looking at it. So I think the regulators also are doing their best, but they're all in different kind of stages of, where they would like to get to. So even just managing this ever-changing regulations pertaining to financial services is something you gotta be very careful about, and nothing better than what Guillaume has said is either having a partner on the ground or having the right team on the ground that lives and breathes this, so that you know how to adapt if you need to. You can't do it sitting here in Singapore. You can't do it sitting out in the UK. You really need people on the ground.
And which country in Southeast Asia do you get most excited about when it comes to their fintech ecosystem?
Well, I think obviously by doing the math and, like you said, looking at the statistics, huge areas like Philippines, Malaysia, Thailand, Indonesia, those are all, I think, the general, I would say, countries that people point to. Obviously, I would still also point out Vietnam, Myanmar. I've literally named all the big countries in Southeast Asia.
You nearly got I think.
But then again, I think some of them are on different priority lists, on the priority list for us. Like I said, I wouldn't go in and do something until I found a partner. So Malaysia, we have a big presence. We have more than 200 staff on the ground. Philippines was another big part that we've actually gone into, close to 100 people there. Indonesia, Thailand, they're all in different stages. So I'm happy to focus on certain countries before I amp up. Then kind of again for me to spread and stray. I don't have the financial capacity right now at Razor Fintech. I do hope that I will be able to learn from Guillaume and get that funding in and really grow. But we're kind of making sure that we are progressively growing, hyper growth, but not just being very mindful that that there are potential kind of speed bumps along the way that we need to be fundamentally be prepared to have to address because of the whole environment here.
Yeah, and everyone's watching closely what happens with those fintech banking licenses. So we'll see what goes on. Guillaume, where do you get most excited about when you look at the Asian fintech market?
So, I mean, I'm going to look at what is my immediate roadmap is that, of course, for us, it's like Philippines and Japan, because that's where we're going live. So these are key countries for us. And a bit also a question like there, we took the approach to build everything ourselves, to be full stack, have full rails. I think like without quoting the obvious, I'm going to say two of the countries that are less obvious, hard to get in from a regulatory perspective and to do well is Vietnam and Thailand. I think like these are, because I say we have purposely for the moment put Indonesia on the side. Because it's difficult to own a foreign enterprise in Indonesia, to operate it in financial services. I mean, there's a fair amount of complications. Same thing as for China. You can do China very well on a cross-border basis via Hong Kong, but you cannot do domestic payments in China. When you can do it now, but it's very difficult. There's only 2 foreign companies who have a license, it's Amex and PayPal. And I think where I agree with Li Meng is that a good entrepreneur is the one that is disciplined. It's just, having a business plan, following the business plan, having your health checks and, how you're delivering against your strategy, not try to do too many things. For us, if we go back to the fundraise, that's why we fundraise late. We were really like, these are all the things we need to achieve before. We need to reach profitability. We want to show our unit economics before we fundraise, not after, because very often you hear people like, raising and with a promise of profitability. I'm not sure it's a good strategy. But I'm not debating, the strategy in general. I'm just saying for us, it was not the right one. But I think like for the way we run the business for us, it's always been like doing a mix of emerging markets and G20. So basically big, strong, confirmed revenue where you build the rails yourself, you do everything, and then going into emerging markets and fundamentally doing those. And those are always of a longer play. Because very often there is a lot of people, but the overall, volume of transaction is small online compared to the big countries. But you're just playing a very long game, which we did in Egypt, which we're doing in Pakistan, and then it's about finding the mix between your emerging markets play and your G20 play, and that's it. And so in Southeast Asia, Singapore is a very good market for us. We do Grab, we do a lot of the very big merchants. So we're like, we've done very well in Singapore. I think people love our technology, market leading. But then it's about like doing some emerging markets in Southeast Asia. And I'm not sure they would qualify as EM, but Thailand and Vietnam have big populations, very, savvy. Everyone has a mobile phone. Internet is very good. Financial services are being kind of displaced quite quickly. And I think that there is a lot of potential there for companies like ours. So I think we love these 2 countries. We're not there yet, but it's we're talking about opportunity. So I'm trying to answer the question properly.
And when you think about opportunities, so we sort of focused on Asia, but you both either have roots in the UK or have actively engaged with the UK. Li Meng, what's your sort of take on the UK fintech sector from here, and what do you get excited about in terms of potential opportunities?
So we obviously have been watching the space for quite some time. I first met Natalie when she was actually not even living in Singapore. And this was like a couple of years ago, I think. Right. So I've really started looking at it 2 years ago. I think I've mentioned some of this to you back then. So we have been watching closely. I think the success stories of some of these fintechs, including Guillaume's business, are good signs that there is this huge potential market for some of the things that we already perfected or have been doing this part of the world. The store was interesting last year when we opened our store in the UK. We have fans coming from Germany, from Italy, from France, just for the opening. So again, that also shows that we have a huge fan base, that if we ever try to take that next step of moving into the consumer side of things, whether it's a bank like or a bank, would we already start seeing fans on the ground and all that? So when we look at going outside of where we are in Southeast Asia, few things that matter to us: is the brand already there? Do we have users already on the ground? Are the regulations favorable for the fintech businesses to be able to go in fast? And then actually, when you look at, especially for the UK, I think there's a check across all three, at least at this point in time. So it is a logical, kind of a space or country for us to look about a kind of European expansion, hopefully sometime soon.
Hopefully, I'm very optimistic and excited about this. And I remember the queues down the street in Charing Cross when you opened up the store. So it would be great to see more of that. And Guillaume, what's the sort of added benefit you found from being a UK company in terms of taking that brand globally?
So I think, what the UK did extremely well, and we need to give it to them, is that they were the first, let's say, regulator that was like forward thinking with, financial services and technology in general. So they we always, like now it's almost table stakes. We talk about all these regulators doing all these things, but 10 years ago, nobody was doing it. And they were open-minded. And then they aligned the government, and especially the City of London, on trying to create a tech ecosystem. Everyone has been trying over the years to try to, replicate the Silicon Valley with, greater or less success. The Silicon Valley is still the Silicon Valley. But the UK really tried. There was like a complete alignment from the regulator to the government to try to create an ecosystem that was open for fintechs and financial services. London has always had this. It's one of the big financial capitals of the world. So I think this is why we chose London, 10 years ago when we started this business, and we got our license there in 2012, which would have been pretty much, impossible to get anywhere else at the time in a tier one, let's say, jurisdiction. What you see now, because you were asking the question, Singapore is doing the same thing. I'm super excited for Singapore because the reality is that the government realized that they want to be leading in the in the region of, obviously Singapore itself, but the whole Southeast Asia region. They don't want a smart entrepreneur to go to the UK to go incorporate his business and start out of there. They want him to go to Singapore. And I think what we've seen now is we've seen Singapore take the best of what's happening in the UK and actually trying to replicate and probably do it much better than you would get it in the UK, because it's Singapore is a country that executes really well. I'm really sorry, Natalie, but I'll say one thing is I love going to Singapore. It's a bit like Switzerland, where I come from. Everything works. It's always perfect. And I think this is something that when you are that entrepreneur that starts, knowing that you have good infrastructures, very fast internet, good banking, all things that we take a bit for table stakes when we live in one of those G20 countries. But if you come from other countries, it's not table stakes. It's, I think Singapore did a very good job. And I think they're not the only ones. Hong Kong also is working on this. But Singapore will always have the benefit of having the independence over China, which is a very big plus if you're an entrepreneur. So I think I wouldn't be surprised again, and I'm not going to tie back it to COVID again, that we're going to see a lot of companies starting in Singapore, growing towards Southeast Asia and using it as a base or a headquarter, because it's a safe and healthy and well-structured jurisdiction where it's easy to do business. I think that's the way I look at it. And I think 10 years ago, I'd have given you a different answer. But I think now, any entrepreneur that starts can absolutely put Singapore on par with the UK or even ahead of it. Then you always start somewhere. For us, it was the UK, but now, we really, like I was saying, we work with more than half a dozen regulators globally at this point. So every single country is its own country and runs, separately when they deal with regulation.
Well, thank you, Guillaume. There's some brilliant predictions in there. Obviously, from my point of view, I would put Singapore and the UK on par, but I'll let you have that one. But I think what the Singapore Fintech Festival shows us is how strong the partnership is between the UK and Singapore. And we're seeing more and more companies go backwards and forwards, particularly across the fintech bridge, which is all about trying to make it easier to engage with regulators in both countries, providing that kind of 24/7 capability in terms of really having that anchor in Europe and then anchor in Asia. But we'll have to see what the world looks like in the next few years. As you say, COVID's going to impact a lot of things. The demand across Asia is absolutely impressive. And so for those companies who are ambitious, there's going to be a lot of opportunities in this part of the world, and that's what we're here to support. So on that note, I should just say thank you so much to both of you for giving us so much time, sharing your thoughts, insights, experience, the highs and the lows, of which there's been a bit, but incredible success in the fintech sector for both of you. So thank you for all of your support. And for everyone watching, if you'd like to get in touch with the Department for International Trade to follow up with any questions, guidance or advice, then feel free to connect with me on LinkedIn, or Francesca McKee, Head of Asia Pacific Fintech for us at the Department for International Trade. And we'd be very keen to support you. Thanks very much, guys. Nice to see you.
Thank you very much, Nathalie. Thank you, Li Meng. Great speaking.
Thank you, everyone. Bye.